Chipotle cutting its sales forecast for a third quarter in a row. Apparently, young diners are cutting back. Let's get more from Jon Tower, restaurant analyst at Citi. Jon, thanks very much for joining us. Obviously, investors displeased with Chipotle today. We saw the stock dropping almost 20% in early trading. What do you think is the concern here?
Yeah, hey, Andy. I think it's the question of what the causes are and when it's going to get better. And there doesn't seem to be a clear answer. I think, the biggest concerns in the marketplace. Management pointed to younger guests and guests with their household incomes less than $100,000 cutting back. And then heading into the month of October, it seems like trends have slowed even more meaningfully with the government shutdown. So, until some things get resolved around that, doesn't seem like there's clear line of sight into the business improving. On top of it, I think the broader concern for investors is the management team and the company has accelerated the pace of some of the innovation and marketing in 2025, and it's yet to really translate into a meaningful uptick or change in traffic trends. So, I think investors are broadly questioning the transaction trajectory and the rate of growth of the company, and or if there's a need for the company to reinvest back in margin going forward. So numbers moved lower last night after the print. I think it's a great buying opportunity, frankly, right here, because I don't think the company is like the longer term algorithm and the opportunity for the business over time, I don't think is impaired. And frankly, I think it's the whole industry is feeling a bit of pain right now. I don't think it's a company specific issue.
Can you remind us, where does Chipotle fit in the price spectrum? A meal there, is it a little more expensive than it would be, say, at McDonald's?
It depends on how you use it, but I mean, frankly, it depends on what market you're in, right? But they consistently say that you can get a burrito bowl, chicken burrito bowl for under $10 at many of their stores across the United States. McDonald's, depending on how you use their meal deals, you can get something for, an $8 meal deal for $8. So it really depends on how you use the different menus. But when you rack and stack Chipotle versus a number of their fast casual peers, they consistently would argue that they're about 20 to 30% cheaper versus those direct peers. So they've got a lot of value on the plate. They've been emphasizing that certainly across their own social media channels in the past year. They need to do more of it. And they've been testing some media. They're going to be changing their creative over the next several months to emphasize that across different channels to try and engage the guests differently and let them know, hey, don't forget, we've got a lot on our plate for the dollar that you're spending.
So you think it's not specifically a problem with Chipotle, this sales weakness?
Correct. Yeah. A lot of the industry data, taking a look at the summer months, it slowed, particularly late July throughout August into September, and even more so in the month of October. So, there's a couple of companies giving some updates quarter to date, for the third quarter and quarter to date. And it's not all that encouraging. Each company has a different backdrop that they're going against, but in terms of same-store sales, but it is an industry-wide phenomena. So that's where I take a little bit more comfort here in the fact that, look, Chipotle is not alone in this. And importantly, they're not doing anything to their business to remedy this that's going to compromise their brand over the long term. They're investing in pieces of the business that will only enhance their proposition to the guest. It's going to improve the operations for their employees and the guest. And frankly, it's things that's going to improve access for the customer over the longer term. So all of these things, I think, will make this business stronger long term. And whenever this slowdown improves, it means that they're going to accelerate faster on the back end of it.
It's interesting. We're tight for time, but the company says we skew younger. You touched on that. And normally for a business, that's great, because you hope to keep these people for life. But in the short term, it sounds like it's hurting because the young people are under economic pressure.
Yeah, it seems like higher youth unemployment. Another thing to keep an eye on is, look, we've had immigration issues in the U.S. and birth rates, right? If you look at just the population and the number of people that were born in the U.S., really 2007, that number kind of peaked, and we're starting to move lower. And that's when a lot of these consumers start moving into the the peak purchase restaurant cycle. So that's another headwind the industry is going to start having to face over the next several years too. So, what it in terms of where do you want to place your investments going forward? It's with brands that can continue to resonate with those consumers, and I think Chipotle is doing a lot with their business to do that going forward.
Jon, thanks very much indeed. Jon Tower, restaurant analyst at Citi.